Your home mortgage payment might be fixed, but it doesn't mean that it can't go down. I've got 5 strategies to make sure that you do every year as your homeowner so that your payment can go down too. This is for people that can't or don't want to ever refinance, people that want to reduce their monthly costs, or for someone who might not know where their payment and dollars are going. So first, let's talk about what makes up a mortgage payment. You've got principal, loan interest, property taxes, and insurance. You've also got a homeowners association fee if you live in a community where there's a fee. Not everyone's in a homeowners association, so this might or might not apply to you. But we call that PITIA, principal, interest, taxes, and insurance, and association. So your principal and interest is fixed because likely you got a fixed mortgage rate. So how can your payment go down? The first strategy is you always want to protest your property taxes. So property taxes can go up a little bit each year, definitely. You want to make sure that every year you're protesting. Every county is different in every state. So when you move in, make sure to ask your realtor or the title company at closing, hey, how do taxes work and how can I protest my property taxes? There's usually a period that they give you to protest. I know where I live in Texas, they definitely send us something in mail with a brochure on how to do it, et cetera, et cetera. So make sure that you're protesting your property taxes each year. In fact, I've got a video down below. If you live in Texas, I've got a video on how to know how to protest your taxes in Texas. The second strategy is to shop for your homeowner's insurance. Now, this one is super important. So if your homeowner's insurance, likely it's included in your mortgage, and so it's kind of out of sight, out of mind. You want to make sure and make a note every year, 2 months at least, 3 to 2 months prior to the expiration or the renewal period. You want to start shopping for rates if you can and polling different insurance companies. Did you know that in homeowners insurance companies, year to year, reevaluate your risk, how many claims they've had in an area? It is so easy for insurance to go up. So you want to try to shop for a carrier that's not as expensive. So you definitely want to do this each year. In fact, I've got a video about that as well that I'm going to put down below about how to shop for homeowners insurance. And this could apply no matter where you live in the country. The third strategy is to remove private mortgage insurance. Now, this stands for PMI. You only have PMI if you put less than 20% down. If your mortgage is an FHA mortgage, Federal Housing Administration, you're not able to waive the PMI. You would have to refinance in order to waive PMI. But if you have a conventional loan, PMI, you only have to pay it until you reach 78% of the original value. So the way to do that is to contact your servicer. If you think your loan balance is under the 78% of what you originally bought it for, you want to contact your loan servicer and ask them the procedure. They might ask you to get an appraisal to make sure that your value has not gone down since you purchased the property. We've been hearing clients tell us that they're having to provide an appraisal to make sure values haven't gone down. So make sure you check on that. Now, PMI, the cost is different to different people. It depends on your loan amount. It depends when you started the loan, how much you put down. But this could be a big savings for people to get your payment downward. The next strategy is to make one principal payment each year. One extra payment can shave 4 to 5 years off of your loan. That is amazing. Just one payment. Now, you could do little by little each month. When you set up your auto payments, you can tell the computer to take an extra $50 or $100 off every single month. Or you might get a bonus and you might want to time it with your bonus each year and go in and make that extra principal payment. So whatever the case, you could save 4 to 5 years off your loan just by doing that one thing. So it doesn't erase your payment now. It doesn't lower your payment now, but long term, you could pay off your house quicker. The next strategy is to make sure that you appeal your escrow shortages and your escrow reanalysis. So this only applies if you escrow taxes and insurance with your lender. They analyze your escrow account usually in the spring. So taxes around the country in most places are paid in December. So in about February or March, almost every lender in the country is doing an escrow reanalysis. This is what we projected we were going to pay last year for taxes and insurance. And this is what we actually paid, and it was higher or it was lower. And so you want to make sure that these numbers are correct. I know people contact me that we've done business with before, and we help them to kind of analyze, or you could call on your realtor or the lender that helped you with the loan and say, hey, I don't understand this. Like, stuff is hard to understand, y'all. It's hard. So don't be afraid to ask for help from someone, you know, financially that's helped you out, that understands this stuff, so that you can understand if there's been a mistake. I've helped people catch mistakes where they paid the taxes twice by accident, or the computer said that they paid taxes twice. So make sure that you ask for an escrow reanalysis, especially if you got new insurance, like we talked about before, or you got an exemption on your taxes. Maybe you turned 65 and now have a special exemption. You can also ask for a reanalysis there as well. The last strategy, you want to make sure that you're deducting your property tax and your mortgage interest on your tax return. So a CPA can help you with this, of course, but some of you might self-file. Did you know that the mortgage interest that you pay, you can deduct from your taxable income? Now, this won't save you on a monthly basis, but it could help you get a bigger refund at tax time once a year. So make sure that you're deducting these things. Places where we don't see that this is happening, we had a client actually recently, and he pays his mortgage to a private person, private individual that he, I guess, owner financed. Make sure that those people are giving you a form at the end of each year that says how much interest you paid them. They're obligated to do that, and sometimes they don't. And so this client never receives a form, so he's never reduced his taxes by the amount of mortgage interest that he was paying. So he was missing out on a deduction that he could have had. So make sure you talk to a tax preparer. If you don't know what this means, there are people out there that can help you for not too much money. Hey, drop in the chat for me. Did your property taxes go up this year? Or are you shopping for insurance and you're not really sure which way to go? Or more importantly, did your escrow account recently go up? I want to hear your comments. I've got solutions. I've got videos that I can point you to from my YouTube channel. And if you know someone that's about to buy a house for the first time, please point them to my course on YouTube that is totally free, Blueprint to Homeownership. I'll put the link down in the description. See you next time.